Hello and welcome to today's tutorial brought to you from To The Tick, and today's topic is the bullish ascending triangle. Now, bullish ascending triangles can be seen in two main areas within market structure: trend continuation and as a reversal. Today we will focus on recognizing the ascending triangle. What does it actually look like? And then we're going to focus on trading the trend continuation setup. Now, this image represents a ascending triangle. It's considered bullish or bearish, defined by the pole direction that the triangle is attached to. So before we get into the details, who might want to learn how to trade these ascending triangles and why? Well, first, it really doesn't matter what instrument you want to trade. They're found in all markets, time frames, price ranges, and really they do happen quite often. They're pretty easy to see once we learn what they look like and we understand their characteristics. Today we will focus entirely on the bullish ascending triangle as a price pattern that potentially leads into a continuation of trend. So let's watch the pattern unfold bar by bar, and that's what we need to do as traders. And we're going to start with the bulls having established this very strong base of support. They've been hitting their head on this line of resistance in the top, just have not been able to get through it, and that's the first order of business. We need to see them finally get the juice and the push to get through that line, and if they can hold it, we're going to be looking for a new breakout, and you're watching the formation of that pole. And again, the pole is the direction for the trend continuation that we're looking for. This would be bullish. With prices rising up to the pole tip, we get a swing high. Then we get our first bar or two as a pullback, we get our first swing low. We make another effort, we got another swing top, and they just can't get through that line in the sand on the top, and we also now have our second pullback. So what this does is now frame our prices into a range-bound situation. Now we look at this structure with this double top area as a big resistance line, and again they have the same structure as where we started. The most important thing about the triangle is that they just can't get through that wall, but while they're doing that, they continue to keep pushing those lows with a little bit higher low, a little bit higher low. And while we're in this period's called consolidation, we're looking for the volume in here as well as the price action to show this particular phase as a big pause. Let's all take a breather. You'll notice also that the pole has completed its formation, and you'll notice it's tilted towards price. It'll always be somewhat tilted towards price. So let's look again at that perfect little image that we had. And again, our pole has established that we're trending bullishly. It's also established that it has a swing top or a tip, and it has finished its completed part of the process, because now we get to work on phase two. Now, phase two is the actual triangle portion, and again, it's the consolidation. We want to see prices weave in and out of here, and you'll notice that this real sharp right triangle doesn't look anything like what your triangle that you've been drawing. Well, yes, it does. It is following the same format. They are the same. We are hitting a line in the sand in the top. We are advancing the low prices. Again, this might have 2-3 swings. It might have 5-7 swings. But the idea is during a continuation pattern, you want this pause to be relatively brief. You want to see the bulls continue to hold that support line, continuing to squeeze those prices, and they call this converging, that blue support line converging into that orange resistance line. And we're looking for that to get enough juice to do the same thing they did down here and give us a whole new breakout. And that's what we're looking at, trying to get them to do. So basically, while we watch this price action weave in and out between this resistance and support, we now have some objective based on the pattern itself. How cool is that? The pattern gives us some objectives for what might actually come next. Remember, the pattern is the triangle. What comes next is the bullish continuation, and that's what we're wanting to trade. So the triangle offers a swing top and a swing low. So we can take that as a measured move. You'll see it in this gray marker, the measured move, and we're going to add that to our new breakout line. Now that's fairly conservative, but it's one of the best targets and it has a really high success rate. Our second option would be to take the full measured move of our pole and add it to what's considered the apex. You'll notice this one's a little lower here. The apex is where those two bars are converging or merging together, and we wanted to actually get a breakout someplace back before we get to that apex. But we're going to be able to target that move from that price point. So let's go on and watch them as they weave in this range-bound environment and go on and finally get that juice to push through just like we're wanting. They've got to hold that line. That's called a throwback. When they come back into your line, hold that line and then continue to push and surge with that brand new volume. Push and surge down here. And that's what we want to see. Regardless of what your objectives are, you want to see the volume and price surging and pushing through that resistance all together, just like we saw down here at the beginning. So again, we've gone from creating a very nice bullish ascending triangle structure with our pole and our triangle, and now we've got a bullish continuation pattern. Very, very pretty. So again, in summation, let's make sure that we understand that for the bullish ascending triangle, the bullish pole is the most important characteristic. The larger the thrust in volume and price, the better. We want to see that thrusting volume and we want to see those bulls completely in control. And then we're going to go into part 2, which is the consolidation. Brief, we hope. The triangle shape so that it gives us those equal highs, that wall of resistance it just cannot get through, and the higher lows, higher lows, higher lows, all of it converging into that apex and or pushing those prices into that resistance. That apex and the new breakout, we want to see a push in volume and price, and then we can use our structure itself to take target measured moves using the pole plus the apex, and or you're welcome to use the triangle swing high to swing low. Add that to your breakout line here and you'll be looking for that more conservative second choice of target. Again, thank you very much. This is the end of our tutorial, but I'd like to let you know that if you visit our website, I will have all the text for these price patterns as well as some chart examples to go along with these videos. And this is a really nice example. And you'll notice it doesn't matter what instrument you're trading. The volume is located on the bottom of the chart. The price action is over here on the right axis. And what's really cool about the continuation patterns is just look at this beautiful big bullish ascending triangle that led to this breakout. Then it comes into the same ascending triangle and led to another breakout. And again, 3 really nice extensions of that continuation. And again, it's all here. Come look at the volume. Come look at what your considerations you want. And again, our website is tothetick.com. edu. Please come and subscribe, and we have lots of great educational material for you. Thank you. That's the end of the tutorial for the day. See you soon.